Gabriel India, a hidden gem in the auto component sector. Folks, listen up. I've got a hot tip for you today. It's about a company that's been flying under the radar. I'm talking about Gabriel India Limited. This auto component maker is revving up its engines. Gabriel India isn't just another cog in the machine. It's a powerhouse in the making. The company has been quietly dominating the shock absorber market. And now, it's time for investors to sit up and take notice. So buckle up, because we're in for a wild ride. Let's take a trip down memory lane, shall we? Gabriel India wasn't always the powerhouse it is today. It all started back in 1961. That's when the company first set up shop in Mumbai. They had a simple goal to make quality shock absorbers for the Indian market. And boy, did they deliver. Over the years, Gabriel India has grown by leaps and bounds. They've expanded their product line and set up multiple manufacturing plants across India. They formed strategic partnerships with global players. Gabriel India isn't just about shock absorbers anymore. They've diversified their portfolio into front forks, rear shock absorbers, struts, and more. They're supplying to both the OEM and aftermarket segments. This adaptability is what sets them apart from the competition. Now, let's talk numbers. Gabriel India's stock performance has been nothing short of spectacular. In the past year alone, the stock has surged by a whopping 65%. As of today, July 5, 2024, Gabriel India is trading at 500 rupees per share. This growth isn't just a flash in the pan. It's backed by solid fundamentals and strong financial performance. In the last quarter, Gabriel India reported a 20% year-on-year increase in revenue. Their profit after tax jumped by an impressive 35%. Despite this stellar performance, Gabriel India's stock is still trading at a relatively modest PE ratio of 22. Section 4. Price targets and potential pitfalls. What's on the horizon? Now, I know what you're thinking. Jim, this all sounds great, but what about the future? Well, I'm glad you asked. Let's talk price targets. Several leading brokerages have recently upped their price targets for Gabriel India. The consensus? They see the stock hitting 600 rupees within the next 12 months. That's a potential upside of 25% from current levels. Some analysts are even more bullish, projecting a price target of 650 rupees in the next 18 to 24 months. If these predictions pan out, we could be looking at returns of over 30%. Of course, it's not all sunshine and roses. The auto industry is cyclical, and any downturn could impact Gabriel India's performance. There's also the risk of increasing competition and potential supply chain disruptions. But Gabriel India has shown time and again that it's up to the challenge. They've diversified their customer base and invested in technology to improve efficiency. Section 5. Why Gabriel India deserves a spot in your portfolio. All right, let's cut to the chase. Why should you consider investing in Gabriel India? They're a market leader in a growing industry. India's auto sector is booming, and Gabriel India is perfectly positioned to capitalize on this growth. They've got a 25% market share in the OEM segment and a whopping 40% in the aftermarket. Gabriel India has been consistently delivering strong financial results. Their revenue has grown at a CAGR of 15% over the past 5 years. Their EBITDA margins have expanded from 8% to 12% in the same period. Gabriel India isn't resting on its laurels. They're actively expanding into new segments like electric vehicles and exploring export opportunities. They've got a rock-solid balance sheet with zero debt and positive cash flow. In today's volatile market, these are qualities that can help you sleep better at night. Section 6. The bottom line. Do your homework, booyah! All right, folks, let's bring it home. Gabriel India looks like a compelling investment opportunity. They've got market leadership, strong financials, and a clear growth strategy. The stock has been on a tear, and analysts see more upside potential. But here's the thing. I'm not telling you to go out and buy Gabriel India stock right now. What I am telling you is to take a closer look. Do your own research. Consult with your financial advisor. Because at the end of the day, successful investing is about making informed decisions and playing the long game. Booyah!